right, so I'm making this video. It's a simple video, but I know a lot of people still get confused when it comes to uptrends, downtrends, and ranges or consolidations. Why you get confused is because a lot of other teachers on YouTube teach you that when an uptrend looks just like this, it's gonna look just like that, and that's not the truth. A lot of times, your uptrend is gonna look something like this right here. It's not it's not always pretty and perfect and mountaintoppy. Like a lot of times, your uptrend is going to come with a small consolidation. So um, some come with a bit of horizontal movement instead of straight linear. And I know that those linear ones are clear and they're pretty, but they don't always play out. And neither do the ones that are in the downtrend play out. But you can tell if you're in an uptrend by having a good indicator. Um, in my defense, I know a lot of people say, "Hey, don't rely on indicators. Don't use indicators," and that may be the case for them. But indicators just keep it makes trading easier. So I am going to say use some indicators. Um, I like using the 9 EMA and the 21 EMA for when it comes to trend. I also like using the MACD, as you can see down here at the bottom. The MACD helps you figure out if the market is ranging. So if you see that the market is moving like this in the MACD, if you see that it's moving and it's ranging and it's not flat, when the MACD gets flat like this. Uh-oh, sorry, my thing is popping all. But when it gets flat like that and you don't see any real range, that's how you know you're in a consolidation. And the reason why I like using the MACD and indicators is because sometimes your consolidation can come with a break of structure. Like right here, look, this consolidation came with a break of structure. And people probably would have entered here and they would have lost out. They would have entered here and they would have lost because they didn't have any other extra confluences to tell them that, okay, price did break through. But as you can see with these black volume candles, I'm sorry, I lost the word, these black volume candles or momentum candles, however you want to call it, you can see that the price is losing momentum. So that would have given you another early indicator that price is probably not going to continue in this downtrend. So that's one way. Another way, if you're not using like the MACD or something like that, if you are using the EMAs, you can see price didn't continue. It pulled back and then you start having this curve. Now, if you're just using regular price action, a lot of times if you're just going off of market structure, what price should do, you're probably correct to buy in, but you're going to eventually just start losing money off of these times where the market just randomly goes into a consolidation. So that's a quick way to figure out if you're going into a consolidation using indicators. But as far as uptrends and downtrends, it is best to really just keep that simple. When you're in an uptrend, you are going to see higher highs, you're going to see higher lows. You're going to want to mark those higher highs and those higher lows on the higher time frame. And then you're going to want to enter off of a pullback, and you can find the end of a pullback on the smaller time frame. So if you're on the 15-minute time frame and you see that price has started and then you saw that it has pulled back, you're gonna want to go to the 1 minute or the 5 minute, and you're gonna want to see bullish structure starts to form back on the 1 minute or the 5 minute after that downtrend, this downtrend right here. Oh, I'm sorry. After this downtrend is over. So once this downtrend ends, this pullback, you should want to go to the lower time frame and start seeing some bullish some bullish structure, and that is where you enter. You enter on the bullish structure on the lower time frame. You set your take profits. You set your stop loss. Some people go for 1 to 2. Some people go for 1 to 3. But once you see that structure, you put your stop loss to where price shouldn't go again, and you get yourself a good 1 to 2, 1 to 2, whatever, and then boom, you make that's exactly how you make your money. And the same as the inverse for a downtrend. Just keep it simple. But I like using indicators to prevent me from entering a false breakout or a false trade on a consolidation. In a consolidation, as you see, you're not going to have any range. You're not going to have too much range in your indicators. They're going to tell you how price is moving, the volume, and what's going on.